Societe, Generale CEO Frederic Oudea, thank you so much for joining Bloomberg Television. Let's start with the cost cuts that you're announcing, 500 million euros at the investment bank. Where exactly will you be cutting?
First of all, may I put your question in perspective? These results is the opportunity to look at what we have delivered versus our expectations for the first year of our strategic 3-year roadmap. A lot has been delivered in many businesses, in all our retail activities, and for example, in the wholesale banking business, in our financing and advisory business. Really good momentum. It is fair to say the area where we have posted more disappointing results is the capital markets. And what we are doing is not just reacting to a difficult fourth quarter. We are taking into account the environment we are expecting in the coming years, with definitely a change versus what we had in mind 12 to 15 months ago in many aspects, financial environment, economic environment, but also the regulatory framework, which will impact the capital markets. And given the current performances, we felt, yes, here we need to adjust our strategic roadmap, refocusing the capital allocation towards our areas of excellence, for example, the distribution of investment products, structured products, our prime brokerage activities, and effectively refocusing our FIC activities, all the areas where effectively we have less profitability and no real capacity to improve. That's where we have announced effectively in the Global Banking and Investor Solution a 500 million euro saving plan at the 2020 horizon in order to take into account this new environment and, of course, improve the structural profitability of these activities.
Will this mean job cuts? Like what level of job cuts is implied for the investment bank?
It's too soon. You know, we have a process where we effectively refine our plan. We'll have also to discuss with our trade unions the potential consequences. It's too soon to comment.
If there were to be job cuts, though, would it be likely in London and Paris? They're your two biggest hubs for employees.
Really too soon to comment.
No percentage point or anything?
No, it's really, as I've said, and we have this objective. We also want fundamentally to save the equivalent of 8 billion euros of risk-weighted asset to absorb what we see as an increase of new regulatory pressure on these activities. We have a preliminary design. Now it's really to enter into more detail and as part of a social dialogue with our trade unions.
I want to know what other potentials are on the chopping block. Like, are you cutting the prop unit Descartes?
What we are confirming is that we have effectively closed our activities, our prop trading activities in Asia. Our pure dedicated prop trading activities are part of the activities under review beyond Asia. Again, the idea is to concentrate, given the constraints, where really we have leading franchises and what is at core in order to improve the profitability.
So other things, possibly long-term commodity and credit trading, does that really make sense? It's expensive, but it doesn't really bring in a ton of money.
As I've said, it is in the FIC business that we will look more particularly.
So FIC is where you're going to be really cutting.
Yeah.
Okay, I want to go to the trading revenue. You flagged this in January, and it came out officially today in part of the results. 20% lower for the last 3 months of 2018, so about 10% lower for the whole year. How exactly did this happen? I want to know, like, what drove this trading revenue lower? Was it one specific incident, like we saw today with BNP, where they had an issue at their derivatives? What really was the pressure for the trading?
No, I mean, and first of all, let me say minus 19, it's exactly the figure, is disappointing, but at the end of the day, compared with some of our peers, I feel that the capacity of risk monitoring that we showed in this very adverse environment was pretty satisfying. Now, it's a little bit across the board. Commercial activities were lower, in particular in Europe, but overall in structured products, in a market, in equity markets, which went down. Second, the trading activities were also very difficult. We did not suffer from one big loss, a surprise in a product or in a model. But overall, again, the cost of hedging was expensive and it was difficult to manage the book, the portfolio, in this trading environment. At the end of the day, what I find reassuring is that we made no loss in the capital markets. We are with a marginal profit, but we made no loss. So again, that gives me comfort. But as you said, the minus 10% versus our expectation mean we have to act. And again, it's not just a reaction to a quarter. It's taking into account the next 5 years and the environment. We need effectively to adjust the capital allocation.
What about the start of 2019? How has trading been this month?
I cannot comment, but you've seen that the market conditions are different.
So would you say a bit more positive?
Market conditions are different.
For 2019, are you expecting it to be a challenging one?
Listen, economically, we feel relatively confident with 2019 beyond some geopolitical risk. We are a little bit more worried regarding 2020. And what we are doing when we think about interest rate and lower rates than expected, where we are thinking also about the economic environment, is this slowdown in the US, which can be expected in 2020, in China, in the Eurozone. So we are anticipating, we are getting ready, even if for 2019 in itself, financing conditions remain pretty good. We have assumptions which are not that bad.
What about the bonus pool? Is that falling for traders for 2018?
We have always shown our rationality in that matter.
Rationality. Because
Yes.
this would be the second straight year of the bonus pool shrinking. Is it like a 25% decline?
No comment. You will see the figures we communicate, but of course we take into account the performance when we decide on the bonus pool.
I want to ask you what worries you most. Is it, you mentioned these geopolitical tensions. Is it trade wars between Beijing and Washington? Is it Brexit? Is it this low rate environment?
Listen, first of all, the Brexit, I think that there is now much more comfort regarding the financial services and a transition period, even if there is a hard Brexit scenario. There is now this 12 months at least transition period on the clearing activity. So this transition period might be longer if there's a soft Brexit. It's more the impact on the UK economy, and I hope, of course, that there will be more soft Brexit than a hard Brexit. Generally speaking, the trend, as I've said, has changed dramatically. 12 months ago, 15 months ago, there's a kind of euphoria on the growth economy. Eurozone was accelerating. US was so happy with the tax cuts and the potential benefits. So there is a change, and effectively what we should avoid is adding to this natural, if I may say, slowdown because of geopolitical decision, which would create a lot of uncertainty. But fundamentally, I think we are facing structural changes that we are factoring in our strategy, and we want to build a resilient model, and I'm encouraged to a certain extent, even by the fourth quarter, by the way we manage our risk. The cost of risk that we have this in 2018 reflects the high quality of our portfolio. All this is part of solid foundations.
Your bank's one of the biggest middlemen when it comes to derivatives, and you announced with Brexit that you'll be moving some of these clearinghouses on this side of the channel. Have you started moving employees given the deadline is next month?
We have plenty of time to adapt to a scenario which is still unclear. As you know, we are very balanced. Between the two sides of the channel, with people, with premises, with systems here, and there was no need for us to anticipate to ask for a license. I think now we have a transition period. We have still time to adjust and to know a little bit better what might happen beyond the transition period. At this stage, it's still premature. Are
there any other preparations you're taking for a no-deal exit?
No, we have already made a preparation, which is to know exactly who might move. As I've said, we have now the transition period. We have still to know what will happen again. As I've said, beyond the transition period, we are discussing, of course, with all the regulators to understand the legal framework, etc., and we will adapt. And I think we will be among the European banks with the most capacity to adapt, as I've said, because we have on both sides a pretty balanced business model.
But no one has packed their bags yet?
No, not yet.
What about France? I wanted to ask you, have you seen an impact of the Yellow Vest protests on your retail business here?
Not really. At least it's not easy to identify it, and it has calmed down since the beginning of the year versus the end of the year. We've seen it's very difficult to identify. The retail activities has remained relatively good in terms of credit production. So, we've not seen, or we are not able to identify specific impacts. Yes, we had, of course, a few branches which were damaged. But we are not too worried about the impact. What is important, of course, is that beyond the demonstrations, we are now something with this grand débat, which hopefully will bring answers and help the French economy to carry on reforming and, of course, growing.
I wanted to ask you about this new EU investigation. It alleges traders colluded to acquire and trade Euro government bonds. Is SocGen part of this probe?
No, SocGen is not part of this probe. I can confirm we did not receive anything from the European Commission on this probe. And can I say that one of the big achievements of 2018 is that we've been able to put behind us the financial uncertainty attached to the three big litigations we had with the US authorities. At the beginning of 2018, there was uncertainty. We've put that behind us, and I can tell you that there is today not a single big litigation which could, in the next 2 years, effectively derail our capacity to generate capital. And so from that perspective, I'm happy with the achievements of 2018. And more than ever, I'm building a bank with a strong culture and conduct, trying to keep in mind what happened 10 years ago in the CIB business with effectively probably loopholes or a culture which was too short-term. In the last 10 years, I've built a robust business model, and I think, again, the way we managed the fourth quarter reflect a capacity in particular of risk monitoring, which was good.
The Deutsche Bank CFO told my colleague Matt Miller last week that banking consolidation is coming to Europe. There's been lots of chatter in the past between SocGen and UniCredit. Is that an option that's on the table?
Personally, if domestic consolidation makes sense, I do not see at all in the short term any cross-border merger. Because, first of all, the environment is not there. There is not enough visibility. We have a lack of visibility on certain key rules. Some contradictions between regulators regarding what kind of banking model they want for Europe. Today, also, I must say, our agenda for the next 2 years is really to deliver the plan. There is so much that we have to do, and if we achieve, and I'm very confident to deliver so much value creation for our shareholders, that this is our priority. Beyond, we will see where Europe will go, whether European governments and Council will be able to give more visibility in the achievement of the banking union, whether we will have not just the cost today of this banking union. Do not forget that we pay as a European bank more than 13% of our net profit to a fund, which is the resolution fund, with no benefit today. So for us, the question is, are we going to capture some benefit from this banking union? It needs probably to be completed. And before we have more visibility on the rules of the games, you will not see anything like this.
A lot of this consolidation talk comes from Germany. You did a market unit deal with Commerzbank. Do you think you would do any more M&A activity like that in Germany?
First of all, our focus is more on disposal than acquisition. The Commerzbank equity and commodity market activities were a kind of unique opportunity which was meeting all our existing businesses, and so potential synergies on the revenues as well on the cost.
So it needs to be very unique.
Oh, yes. I mean, in particular, when our priority is to build the capital, and part of the plan we've just announced is also even more safely a roadmap towards this 12% Core Tier 1 ratio, with an increase of our disposal program. The priority is more disposal than acquisition. So I see today nothing. And again, it was a pretty unique opportunity.
On your 2020 plan and the CET1 ratio of 12%, do you see anything taking you off that track this year?
We are giving a lot of visibility to our shareholders for the next 2 years on terms of capital trajectory. First of all, the decision on the disposal, the increase, the decision on the scrip dividend, and more visibility on the TRIM impact in 2019, the model correction, whatever, which is between 30 and 50 basis points expected in 2019. The scrip dividend will help us not to have a Core Tier 1 ratio going too low, and it will enable us to finance to a certain extent by anticipation this effect. And then we are giving the visibility for 2020. I mean, I think the shareholders should see that with a range which will be between 12.3 and 12.7% Core Tier 1, we have a buffer to meet this Core Tier 1 and should be reassured on our capacity to meet this objective.
My final question, I want to ask you about succession plans. There's been issues at Santander and UBS. You're, in a few months, going to get a brand new mandate as CEO. But when the time comes, what would be your priority for a successor for SocGen?
You know, we had this departure and voluntary departure beginning of last year of Didier Vallet. And what the board clearly said is that we would rebuild a succession plan. With, of course, the capacity, what we've showed, a capacity to nominate, to appoint a breadth of talents, internal talents, in their new functions. And the board has confirmed that they will propose to the shareholder the renewal of my mandate, which will allow the board and myself, of course, to identify in due course the right candidate to take over.
My question on that, very quickly, because I also cover diversity. Are there any women candidates? Listen,
I was very proud to appoint the first deputy CEO, a woman. Among the 4 deputy CEO, new CEOs, there is a woman who, on top of that, is Greek by origin. So I think we are showing effectively progress in diversity, and I'm very proud of that. And of course, it's one of the core objectives of Societe Generale to promote diversity of all kinds, actually, in its top management team.
So maybe a female CEO one day?
Why not? It will be the board to decide in due course.